Trend Analysis Part 2. We're going to break things down into its most smallest parts and then begin to build on it into where we put all these pieces together, recognize and understand what the trend is and when the trend changes. And it starts with a pivot. And we have to define what a pivot is, of course. And a pivot is a reference point. There's been a shift between the forces of supply and demand. As I've said, we refer to supply, meaning this is where there is resistance. So there's supply there, there's sellers there. Demand is where there's support and there should be buyers. So pivots begin with a higher low bar on both sides of a bar. And that's a low pivot. Or with lower high bars on both sides, meaning a high pivot. And we're just going to use PH and PL to mark them. However, at that point, you really don't know whether it's going to become a pivot of any significance. So we need more information. Once there are 3 bars to the left and right of the pivot bar, a pivot has been created for us to use for trend analysis. Now, why 3? Well, we could use 2, but it really isn't that many bars. And when you see a bar with 2 bars to the left and the right, there has been a shift there, but we have to make a decision here as to what we're going to use as something of significance. You might see others use 4, 5, 6, 12, whatever it might be. But here we have to make a choice. And I've just found that using 3 bars to the left and the right works out really well. Now we're going to look at what the trend of pivots will be, and we'll use that objectively and clearly to determine the trend and trend changes. So we need to establish some guidelines. An uptrend is defined as pivot highs and pivot lows, higher highs and higher lows. So within that uptrend, a pivot low prior to the higher high is major support. A break below major support in an uptrend ends the trend. Pretty simple. A downtrend is defined as lower lows, right, pivot lows, and lower pivot highs. Within a downtrend, a pivot high prior to the lower low is major resistance. So a break above major resistance in a downtrend ends that downtrend. Here I have every pivot high marked, and it has 3 or more lower highs to the left and right of that pivot. And every pivot low, PL, has 3 or more higher lows to the left and right of the pivot. And you can see how those pivots are moving in a trend or not. These pivots are the reference points created on what I'd call the battlefield between buyers and sellers. It's clear, objective information. Cannot be manipulated like subjective analysis tools, Fibonacci lines, channels, trend lines, and etc. So here we have pivots moving up and down, sideways. You have a lot of highs and lows intersecting each other and chopping back and forth, what we call a loose arrangement of candles showing uncertainty. So the pivot, the highs and lows, they're in constant opposition of each other. What do? Stand aside, of course. Just stay away from it. Wait until it's clear as to what's happening. It's trending. The consolidation has tightened up. So this is, again, what we call a loose arrangement of candles. So we wait for it to begin to tighten up. Of course, we're going to look to see if there's a tradable void if we're thinking long, up above, or a tradable void below if we're thinking short. So here we have a picture of certainty, I should say, in an uptrend. And we have a tight arrangement of candles that are shown. Notice the ranges are about the same, meaning the ranges in each of the individual candles are roughly about the same. Here we have a larger one, but you can see overall right here, they're all pretty much about the same size. And that's a picture of certainty. And prices continue to trend in that direction. So we want to track that major support in an uptrend and see if it's violated or where the trend becomes whippy or not. So here, as prices continued to move up, and they pulled back, and as they started to trend higher again, we can see here, and we can see over here, it's getting kind of whippy. and the ranges are expanding and there's a lot of overlap between the candles, and tails are starting to form. That's where uncertainty starts to come in, and often it precedes a trend change. Now, by condensing data, it reduces the pivots. Now, what does that mean, condensing data? That means going to a higher time frame. So here I'm showing you a weekly chart. And it's actually the Dow. And as prices are moving higher here, well, over here there was a bit more uncertainty and was larger ranges. But as certainty comes in and the ranges contract and prices are trending, you'll see fewer pivots. So pullbacks and advances create pivots. And in a higher time frame, when prices are trending and there's a lot of certainty, as you can see here, there are no pivots. But we can move down to a smaller time frame or a lower time frame to actually see them. So here's a lower time frame. Here's the daily chart. And now we can see more pivots. As the price increases in momentum, there's going to be fewer pivots, which could be a climactic type of a move. In here, in the daily time frame, I can see that there was more consolidation, more uncertainty, more pivots. They're opposing each other. You have candles overlapping. And then there was this break to the downside that immediately reverses back up again. Remember our retracement concept, and took out all of these pivots here, that resistance, bottoming tail bar, and now prices begin to trend. And within uptrends, there are corrections and retracements. But as certainty increases, prices begin to accelerate again to the upside, and that creates a void, which opens up the probability of a correction, a pullback, where it could go sideways and then push higher. Now, it created a void below, but is there a void above? At this time there was, because it was making new all-time highs. Now we're moving down to the 60-minute chart, and we can recognize that prices are moving higher here. They were accelerating on the daily time frame, but we can see the pivots on the 60 time frame, and this is one of the ways that we can get on board the moving train, meaning a momentum move in the higher time frame as we move down to the lower time frame. So even though momentum had picked up, which we saw in the daily time frame, the trend had not broken yet on the intraday time frame. So for example, we see a climactic kind of move or an extended move on a higher time frame. We were looking at the daily. If we're now considering as an intraday trader to sell it short, of course we're going to want to see a trend break. And we don't have that happening here on the 60-minute chart. So the messages continue to go with the trend until it ends. Now, in the Master Trader Advisory Market Edge membership, I track trends of broader market indices and various sectors, and I do that on the weekly time frame, the daily time frame, and the 60-minute time frame, and we track it from week to week, and I look for and share with subscribers those trends and when they're in alignment between multiple time frames or not. So here is an example from one of the letters, and you can see the broader market indices here, and then all the various sectors that are tracked. And what we see here, these names that are highlighted in green, they show that the weekly and daily time frames are in alignment with each other. And when they are in alignment with each other, that suggests they're going to continue to move in that direction until that changes. I cover the hourly time frame as well, so we can have an hourly time frame that's either sideways or down against an upward trending weekly and daily, which says get ready during this correction and pullback for a continuation in the direction of these higher time frames. Now, if it's white, well, that means that they're either out of alignment in the moment or they're just going sideways. Now, these two lines here, these two columns track what happened the previous week, and this would be the current week in the letter. So you can see when this changes from one week to the next or whether it just stays constant. Now down here we see that in pharmaceuticals on this particular week went from sideways to a downtrend. So I know that there was a correction there. So with that information, I can then go and look inside of the pharmaceutical sector and now look for stocks that are moving down if I want to consider selling short. Retail is just neutral across all time frames, and it has been that way. So message there is most likely stay away. Technology has been doing well, continues to do well, look for longs. Over here, neutrality. But consumer discretionary turned up on the daily time frame. Maybe this is the beginning of something beginning to start, which will evolve into the weekly. Now, consumer staples, see the red arrow here? That means it came into alignment to the downside, the weekly and the daily, that week. And this is moving down, and probably, we'd have to go look at the charts, of course, but odds are pretty darn good we're going to find some good short setups over here. And you see that this is marked red because this is now in alignment. Financials have been moving up. Healthcare got a little neutral that week, turned sideways. We have a whole lot of sectors here that have been doing well in alignment. And on this week, the solar ETF came into alignment. The green arrow came into alignment where the weekly and daily were in an uptrend. Gold here, neutral, probably stay away. Gold miners actually turned down. And we track bond yields as well. And they had just turned up on the daily. So something here was beginning to improve where this was neutral the prior week, still in a downtrend on the weekly. Hourly is turned up. Might want to take a look at that. Let's move on to Trend Analysis Part 3.